Would you believe it, folks? MicroStrategy just bought another stack of Bitcoin. Even as BTC hits new all-time highs, Michael Saylor, Bitcoin's biggest permabull, is showing no signs of slowing down. This is exactly why MicroStrategy is one of the largest BTC holders in the world. And recently, the company announced its plans for the future, plans that will involve investing tens of billions of dollars into even more BTC. So today, we'll tell you everything you need to know about these plans and what they could mean for MicroStrategy's stock price and for Bitcoin. Stay tuned. Before we go ahead though, you need to know that I am not a financial advisor and nothing in this video is financial or investment advice. This video is purely for educational and entertainment purposes only. And with that out of the way, let's begin. Now, you can consider this video to be a follow-up to a previous MicroStrategy update that we put out earlier this year. We strongly recommend that you give that a watch, and so we'll leave a link to it in the description. For now, though, here is a quick refresher. So, MicroStrategy was created in 1989 by 3 MIT students, Sanju Bansal, Thomas Sparr, and of course, Michael Saylor. The company specializes in business intelligence solutions that give business managers the tools they need to make decisions to maximize productivity. In 2020, Saylor, then the company's CEO, took the unprecedented decision to invest $250 million to buy more than 21,000 BTC, despite MicroStrategy having absolutely nothing to do with crypto. The idea was to use BTC as the company's new primary reserve asset, mainly as a hedge against inflation, which devalues the US dollar and other fiat currencies over time, and, by extension, MicroStrategy's reserves. Since then, Saylor has become Bitcoin's biggest advocate and ramped up MicroStrategy's BTC holdings by the bucket load. Notably, he chose BTC as MicroStrategy's reserve asset rather than traditional assets like gold. That's because he believes Bitcoin is superior thanks to its digital properties which make it fully portable and transferable. In fact, Saylor is so bullish on Bitcoin that he even stepped down as MicroStrategy's CEO in August 2022 purely to focus more on Bitcoin. He now serves as the company's executive chairman, handing the CEO role over to Fong Li. Now, MicroStrategy's strategy is to simply buy, hodl, and buy some more. Saylor has said that the company never plans to sell its BTC because there's no point in swapping it for an inferior asset like the US dollar. Touché. Now, in order for MicroStrategy to fund its constant Bitcoin shopping spree, the company has primarily converted large portions of its cash reserves. However, there have been a few other ways it's been filling its Bitcoin bags. These include taking collateralized loans out against that BTC to buy, more BTC, as well as issuing convertible debt notes. For context, convertible debt notes can be exchanged for company shares once they hit a predetermined price. This has allowed MicroStrategy to rake in millions of dollars at lower interest rates than with regular bonds, without the risk of immediately diluting shareholders. This method has allowed MicroStrategy to stack sats at an unprecedented rate. Consider that in our update just several months ago, the company was holding a total of 214,246 BTC. Since then, MicroStrategy has scooped up another 65,174, giving it a total of 279,420 BTC and making it the largest corporate BTC holder in the world. Who knows, it could even be more by the time you're watching this video. And by the way, if you think this video slaps so far, go ahead and give that like button a slap in return. Don't forget to punch that subscribe button too and flick those notifications to catch our next one.
Hey man, hey, what do you do for a living?
Me? I'm a crypto YouTuber. Yeah, it's pretty fun job actually. See ya.
What about you? What do you do for a living?
Oh, me, man. I checked the Coin Bureau deals page. It's got sign-up bonuses of up to $100,000 and trading fee discounts, but I mean huge trading fee discounts and exclusive altcoin alpha in their subscription service. Check it out.
Okay, so now that you're caught up, You may be wondering what MicroStrategy has been up to since our last video. Well, it may surprise you to know that despite its consistent buying of BTC, it actually closed Q1 at a net loss of around $53 million. However, this doesn't take into account the value of its BTC stash, which at the time was hitting new all-time highs. In case it wasn't obvious, the price of MicroStrategy's stock, MSTR, is heavily correlated with the price of BTC. Put simply, MicroStrategy's BTC reserves means that MSTR acts as a sort of leveraged bet on Bitcoin. As such, the company's MSTR stock has surged by around 500% in a year, even outperforming BTC itself. In June, MicroStrategy sold almost $800 million worth of convertible debt notes to buy more BTC, 12,000 more to be precise. The company's Q2 earnings report was released shortly afterwards, which revealed another net loss, this time of $123 million, although again, this doesn't factor in the value of its BTC stack. By this point, MicroStrategy was sitting on 226,500 BTC, worth around $14.7 billion at the time. Obviously not satisfied, MicroStrategy then purchased another 18,300 BTC between August and September, bringing its total holdings to 244,800 BTC. This clearly wasn't enough either, because just days later, MicroStrategy announced another round of debt offerings with the intention to raise another $700 million. This target was smashed, though. By the time the debt note offerings were completed, it had actually managed to raise over $1 billion, which was used to bring the company's reserves to its current total of 279,420 BTC. For perspective, that's 1.2% of BTC's total supply. Crazy stuff. Now, according to a tweet from St. Michael himself, this ungodly stack of more than $250,000 BTC was purchased at an average price of around $42,000 apiece. In other words, MicroStrategy is sitting on insane profits. And as you'll have guessed from BTC's recent price action, this means that MicroStrategy's value has likewise shot up. In fact, the company's approach to Bitcoin has resulted in it outperforming every single company in the S&P 500 index since 2020. Sadly, though, its stock volatility and its regular quarterly net losses means there's little chance of MSTR itself being added to the S&P 500 anytime soon, which is a real shame. I mean, just imagine how much adoption Bitcoin could get if MicroStrategy were to be listed. Well, maybe one day, eh? Now, MicroStrategy recently made another huge announcement, and this one is so bullish that it deserves its own section. On the 30th of October, the company announced what it calls the 21-21 plan. In a conference call shortly after the announcement, MicroStrategy's president and CEO, Phong Le, announced that the company's value proposition is becoming increasingly centered on its Bitcoin treasury strategy. As such, MicroStrategy now has a new description as the world's first, quote, Bitcoin treasury company, which, as he points out, has the acronym BTC. I'm sure that wasn't an accident. Lee then unveiled MicroStrategy's plan to raise $42 billion between 2025 and 2027. He pointed to the significance of the number 42 by making a reference to the Hitchhiker's Guide to the Galaxy that was dangerously close to being funny. This $42 billion plan involves an even split of $21 billion being raised in equity and $21 billion in fixed-rate securities. Lee also pointed out that 21 is a significant number because of Bitcoin's maximum supply of 21 million BTC. Seriously, someone put a leash on this guy. Doesn't he know that conference calls are supposed to be ridiculously boring? Anyway, these $21 billion raises are made up of 3 years' worth of increasing targets. In 2025, MicroStrategy aims to raise $10 billion in an even split between equity and fixed income. In 2026, the company aims to raise $14 billion, and this target is bumped up again for 2027 to $18 billion. This brings the total raise to $42 billion, because, maths. At today's prices, that works out to around 520,000 BTC, almost double what the company already holds. Although if BTC keeps on rallying at its current rate, this number could obviously be a lot less. Well, I can think of worse problems to have. What's crazy is that, according to Lee, this would make this $21 billion equity raise the single largest ATM program in the history of capital markets. Now, for those unfamiliar, an ATM equity program, which by the way stands for At the Market, is a way for a public company to raise money by selling new shares of its stock directly to the open market. Using an ATM program gives MicroStrategy more flexibility than it would have if it used other methods, like a large stock issuance or a bond sale, for instance. That's because it wouldn't have to sell big chunks of shares all at once, and it could also take advantage of favorable market conditions, meaning the company's stock price can stay relatively untouched. In any case, Andrew Kang, MicroStrategy's chief financial officer, also confirmed in that conference call that MicroStrategy had paid off its old debts. This means that 100% of its BTC holdings is now unencumbered, no strings attached. Kang also announced that, as a Bitcoin treasury company, MicroStrategy will now be using a new key performance indicator, or KPI, called the BTC yield, something the company introduced last quarter. Basically, this KPI allows the company to assess its ability to use equity debt and excess cash to acquire new BTC at a faster rate than it issues shares. Notably, the BTC yield isn't the same as yield in the traditional sense. According to Kang, MicroStrategy defines BTC yield as, quote, a period-to-period percentage change in the ratio of our total Bitcoin holdings to our assumed diluted shares outstanding. Now, to say the reception of this plan was positive would be something of an understatement. In some ways, though, this is a little bizarre. That's simply because, for pretty much any other publicly traded company, the decision to issue and sell $21 billion worth of shares would be enough to cause shareholders to panic. However, MicroStrategy is apparently playing by its own rules, and as a result, most shareholders welcomed this decision. In fact, some investors have even said that they'd happily be liquidated because that would mean that MicroStrategy is building more value by buying more BTC. Naturally then, this begs the question of what this could mean for MSTR's stock price. Well, according to some market analysts, MicroStrategy's 21-21 plan could help propel the company further than other publicly traded companies, and possibly even beyond some countries. According to an article by Cointelegraph, one fintech analyst said, quote, if there were any doubts that MicroStrategy would lean into its BTC acquisition strategy amid a rising Bitcoin market, they were dispelled before giving MSTR a price forecast of $300 per share. Notably, this is more than his previous estimation of $245 per share. And what's crazy is that he bases this forecast on a prediction that BTC will reach $175,000 in 2025. Just let me say that again. A fintech analyst reckons BTC will hit 175K in the next year. One analyst who focuses on crypto mining stocks pointed out that the $21 billion equity is equal to the market cap of all crypto mining companies combined. Other analysts have said that this means MSTR is potentially unrivaled. To make things even more interesting, MicroStrategy announced back in July that it would be doing a 10-for-1 stock split. In other words, dividing each MSTR share into 10 smaller shares. This was then done the following month, meaning that even more investors now feel they can buy into one of the best performing stocks out there. However, there's just one potential problem for Michael Saylor's MicroStrategy, and it's a problem that might surprise you. You see, this problem could be, well, Michael Saylor. I know, but hear me out. Back in May, Saylor declared that the SEC would deny the approval of any spot Ethereum ETF. Obviously, he was dead wrong. Now, to be fair, this isn't a big deal. I mean, we can't judge a guy's credibility by just one mistake, can we? The thing is, though, this is the least of what he's done to attract the spotlight recently. In June, he settled a tax fraud case that stemmed back to August 2022. The TLDR is that MicroStrategy and Saylor himself were accused by local officials of one of the largest income tax frauds in history, as they allegedly hadn't paid any income tax in the last 10 years. Saylor settled that suit for $40 million, which is obviously great news, but it does bring very serious allegations to the surface. Allegations that potential investors could see as a massive red flag. Another problem, meanwhile, is, ironically, just how bullish Saylor is on BTC. That's because some of his BTC price predictions are extremely high. Most notably, he predicts that BTC could be worth $13 million per coin by the year 2045. Now, don't get me wrong, that's certainly possible, and by Satoshi, we hope that it's even higher. However, the sad truth is that for many traditional investors, this estimation could be seen as outlandish. They could even be put off from investing in MSTR stock as a result, considering that its entire value proposition would then depend on an unrealistic target. But all of these things pale in comparison to a shocking statement that Michael Saylor made in October this year. During an interview, he was asked about the likelihood of BTC being confiscated in a similar way to how gold was during the Great Depression of the 1930s, if that BTC were to be held by institutions. Saylor's response honestly had us scratching our heads. He replied, quote, "People say that, but mostly it's paranoid crypto-anarchists that say that." He then added that this is just a fear-mongering tactic that people use to get you to spend money on hardware wallets, a passport to move away from an untrustworthy government, an account, a financial advisor, or an insurance policy. Put differently, Bitcoin's permabull advocated against self-custody, saying that people have nothing to lose by trusting governments or institutions. I know, what the f*** was he thinking? Obviously, these comments sparked outrage, the reserve currency of the internet, and crypto investors everywhere wasted no time in slamming Saylor. Simon Dixon, one of Bitcoin's OG investors, said that it made sense for Saylor to advocate against self-custody because it would go against MicroStrategy's ambition of becoming a de facto Bitcoin bank. Some ex-users said that this was Saylor's version of, quote, living long enough to become the villain. Heck, even Vitalik Buterin got involved, saying that Saylor's comments were, quote, batshit insane. Fortunately, Saylor soon backtracked on his comments, stating in an X post, quote, "I support self-custody for those willing and able, the right to self-custody for all, and freedom to choose the form of custody and custodian for individuals and institutions globally." I suppose that's as close to an apology as us paranoid anarchists are going to get. The thing is, though, these comments are still out there and could easily reflect on MicroStrategy, considering that Saylor is such an important figurehead for the company. Fortunately, though, the recent announcement of the 21-21 plan that we mentioned earlier seems to show that all has been forgiven, because Saylor has received nothing but praise ever since, which is great, to be honest. From our perspective, Saylor spoke out of turn without really thinking too much about what he was saying. Let's just hope that's all it was, though. Now, with everything considered, this brings us to everybody's favourite question. What does all of this mean for BTC? Well, in case it wasn't already obvious, MicroStrategy's 2021 plan is bullish AF. $42 billion is a lot of money to throw at Bitcoin over the next few years and should play a part in supporting BTC's price. It could also cause some investors to FOMO in once they see where the so-called smart money is heading. On top of that, it would likely attract more media attention, potentially bringing in even more retail investors who want to see what all the fuss is about. Incidentally, this is exactly what happened back in 2020 and was a key catalyst that kick-started the bull market. Not only would this be rocket fuel for BTC, and the wider crypto market for that matter, but it would also pump MSTR's price too. This would give MicroStrategy even more money to spend on BTC, which would push up the price further and attract even more investors who would buy more BTC and also more MSTR stock. I think you can see where we're going with this. The only worry about the company's 21-21 plan is that BTC's supply could become more concentrated as a result. Consider that MicroStrategy already owns 1.2% of the total supply, and this could be doubled, possibly even more, depending on the price. When you factor in the countless amount of lost BTC over the years, and all the BTC held by ETF issuers like BlackRock and Fidelity, you quickly realize that the remaining liquid supply is trending much lower. This means that BTC would be much more sensitive to any price fluctuations, potentially making it more volatile, despite an inevitably larger market cap that would otherwise prevent this. But in the meantime, Saylor will continue to preach the word of Bitcoin, converting more and more people to its power as a hedge against inflation. This message will only become more pertinent as the massive US debt pile continues to grow over time. And if you watched our recent video about the US debt, you'll know that Bitcoin could be the safe haven asset that people so desperately need to protect themselves in the event of an economic crisis, which could happen sooner than you think. And you can learn more about that by using the link in the description below. And that's all for today's video, folks. So if you found it insightful, let us know by smashing that like button. If you want to see more educational crypto content, subscribe to the channel and ping that notification bell. And if you want to help others gain some insight into this particular topic, consider sharing this video with them. That's all for today. Thank you so much for watching, and I'll see you next time. This is Guy, signing off.